Bitcoin blasted through 100K yesterday, surpassing Amazon as the 5th largest asset in the world. And Michael Saylor says every Bitcoin that you don't buy today will cost you $13.5 million in the future.
So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years.
It's the month of May. So naturally, Michael Saylor's talking about Ferraris and thinking about the shake and bake. But what he didn't see coming was the steak and shake. Who's enabling customers at 16,000 stores to buy beef tallow fries with Bitcoin? But it's not just Indianapolis burger joints coming around to Bitcoin. The BIS, the largest Bitcoin hater, just acknowledged that Bitcoin has real use cases, like rising when inflation surges, or usage spiking when remittances get pricey, and adoption going up as capital controls increase. Maybe Bitcoin is ripping because in places like Spain, you have to alert the government if you want to take out more than 3,000 euros worth of cash. And not doing so may result in a 150,000 euro fine. Maybe Bitcoin is ripping because of the beliefs of the new potential Fed chair in May of 2026, who says that he's going to unleash the money printer on capital markets. Whatever your predictions are for why Bitcoin's ripping, it's probably not the full picture. We're going to dive into all that today on today's episode. This is Dante Cook with Bitcoin Simply. Let's go. After blasting through 103K, Bitcoin overtook Amazon as the 5th largest asset in the world. And someone credible to speak about this topic is none other than Bill Miller, whose dad was the largest investor in Amazon other than Jeff Bezos back in the day. He says that Bitcoin overtaking gold as the top asset in the world at $22 trillion is very likely.
One of the most important things to keep in mind is if you just look at Bitcoin, it doesn't matter, right? Bitcoin doesn't care. It's back in the 6 figures with a lot of room to go. If you compare its primary functional use case, which is actually a check and a balance on the lack of accountability in fiat unit creation, we still have a long way to go. So gold is a 20 trillion market cap. Bitcoin is still 2 trillion despite functional superiority to gold. It's much harder to steal, much easier to store, much easier to instantly transport, and more importantly, you can actually audit it. So I don't know if you saw it, but there's an estimate that said that auditing Fort Knox would take 44,000 hours and approximately 18 months to complete. I think it'd be a lot nicer for the American people if they could just go to a handful of auditable Bitcoin addresses on a blockchain explorer and see exactly where the American people's Bitcoin is.
I want to highlight a couple things that Bill said. He highlighted an article that predicted that it will take 18 months and 44,400 man hours to do an audit of gold today at Fort Knox. But he also mentioned a lack of accountability in money printing globally. And this is exactly what would happen and accelerate if Kevin Warsh is elected the new Fed chair in 2026. And right now, he's the leading candidate. Listen to what Arthur Hayes had to say about this.
Trump is going to spend more money, have a bigger deficit than Biden. It's just math and the priorities of the administration. And so I can see Bitcoin going up 10x from here to $1 million by 2028. Especially if we get a change in sort of the Fed and they come back on side and they do quantitative easing, they start cutting rates. And, as you said, Powell's term ends in May 2026. Everyone believes that Kevin Warsh will be the next Fed governor, and he's gone on record basically saying the Fed is not independent. The Fed should do whatever the president and the politicians want, which means print the money, give more of it to the system to act as stimulus. And so I see an acceleration of money printing and fiscal debasement in May 26 onwards. And that's probably when we get the sort of crazy runs in Bitcoin and other sort of fixed supply assets.
$1 million Bitcoin is just the beginning. When the money printer turns on, Bitcoin is going to outperform gold in a big way. And this is why it's not just Bill Miller who's saying that Bitcoin is going to overtake gold as the largest asset in the world.
Clearly, Bitcoin is now becoming a geopolitically relevant asset. How it interplays in this dynamic of global fragmentation, I could see it playing a role of if the US creates this system, a more enforced treasury dollar standard in the West, and gold kind of becomes this settlement asset intermediating trade between East and West. Bitcoin, I think, can play a much more effective role in that system because it's very hard to actually settle trade with gold without it being centralized and having these other counterparty risks, which is very expensive. And so it's like a 19th century style asset. It doesn't really quite work for a 21st century economy that will still have global trade. We're not going to go to complete isolated blocks. I don't think we're going to completely decouple. So I think Bitcoin can evolve, and it could happen quickly in the next few years, into a role where it's taking some meaningful share from gold.
You've spoken a lot about the incentives for the US to adopt Bitcoin as opposed to gold. That's very strong because of the amount of Bitcoin domiciled in the US with US companies, ETFs. Do you want to just explain that?
If you run the numbers, and these are guesstimates, is if you add up the total amount of gold reserves in the US, the amount of gold held in gold ETFs, and then individual holdings of gold jewelry that's used as a store of value, we have maybe 8 to 10% of the total above ground stock of gold. If you do the same analysis for Bitcoin, and it's tough, you have to do a bunch of heuristics, but roughly say 35 to 40% of the total current available Bitcoin supply is owned by Americans or the American government or American ETFs or American companies like MicroStrategy. So 35% versus 8 to 10%. So if you imagine a scenario where both these sort of neutral reserve hard assets start to become monetized in the global system, it's clear to me that we stand to gain disproportionately if Bitcoin succeeds relative to gold.
The most beautiful thing about this is that any normal person can take part of these revolutionary returns, 100x returns. Work hard, buy Bitcoin. If you want to buy a Ferrari, don't, and buy more Bitcoin.
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you adopt it. You keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari, buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long dated, mid dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage or 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive. And don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
One of the ways that the wealthy stay rich is that they don't sell valuable assets. They borrow against those assets. And that's exactly what you can do with your Bitcoin stack. If you've been watching this show for a while, you've been stacking a lot of sats. But hopefully you don't want to sell those sats. And that's why you can go to Ledn, the leader in Bitcoin-backed loans, which will allow you to unlock liquidity in your Bitcoin without selling your Bitcoin. They've issued over $9 billion worth of Bitcoin-backed loans, and you can get liquidity in your account in less than 24 hours. Loans start at just 12.4%. But if you go to learn.ledn.io/simply, well, you can get 0.25% off your first loan. Go to learn.ledn.io/simply to get started today. One of the other ways you can take part of this revolution is by removing Bitcoin from exchanges, banks, and other custodians that aren't you. You can take full sovereignty of your future by removing your Bitcoin from third-party custodians, like Coinbase. But you don't want to do that alone, and you don't want to do it the wrong way. So one of the best ways that you can avoid a future of losing your Bitcoin is by hiring a coach, like the Bitcoin Way, who will provide you with a mentor to help you remove your Bitcoin from exchanges privately, safely, and securely. Oh, and confidently too. Go to thebitcoinway.com/simplybitcoin, schedule a free 30-minute consultation with their team. The best advice in investing is to simply buy the dominant monopoly and to never sell it. And in the world of digital assets, that's Bitcoin. And it's becoming increasingly so.
The United States should be the premier destination for digital assets.
The United States government is already saying that they're going to allow digital assets to flourish. So why not hold the best one? And this is evident in announcements like this one from the Office of the Comptroller of the Currency, who said that banks are now allowed to custody and hold Bitcoin on behalf of their customers in their discretion.
Our top focus is Bitcoin corporate adoption across corporate America. And it really is staggering how early that we are in this movement. Less than 1% of companies, public companies, have adopted a Bitcoin treasury.
This is going to unlock the floodgates. This is going to drive more corporate adoption of Bitcoin, which right now, less than 1% of corporate companies hold Bitcoin as a treasury balance reserve asset. Companies like JetKing are announcing that they're going to buy tens of thousands of Bitcoin and raise billions of dollars to do so.
In the next 6 months, we're looking to raise and scale to about 180 Bitcoin. In the next year, we'll be touching about 1,800 Bitcoin, and ultimately before the next halving, around 2030, whatever instruments are at our disposal, we will touch about 18,000 Bitcoin.
And this is what leads to Bitcoin reaching economic immortality, as Michael Saylor says.
You don't want to miss the next wave. Digital capital is the next wave. The way you know it's the next wave is because it's growing 62% a year. It's going to grow past you in a bit.
No acts of war, no destruction of property. All of these factors that are flowing into Bitcoin, like corporate adoption, nation states adopting it, pension funds adopting it, governments adopting it. This all leads to a future where Bitcoin makes up $450 trillion worth of assets in the world. We have fiscal irresponsibility with no accountability at the central bank, especially if a new Fed chair like Kevin Warsh is put in place. We have Bitcoin having better monetary properties of gold, like auditability, divisibility, portability, which are all pretty important in a digital world. And you also have the threat of confiscation still happening in places like Europe. You also have previously hostile Bitcoin actors like the BIS saying that Bitcoin has actual real use cases. Welcome to the party. The dominoes are starting to fall. Don't overthink the trade. Stay humble and stack sats. One of the ways you can stay humble and stack sats is by going to Bitcoin conferences to stay glued in on all that's happening in the Bitcoin world and industry. 20 to 30,000 people are going to be doing that this year in Las Vegas from May 27th through May 29th. Go to b.tc/conference/2025 and use the promo code SIMPLY to get hooked up with 10% off your tickets. The team will be there and you'll be able to buy cool merch like this. Don't miss out. If you enjoy content like this, please do like and share this video and subscribe to the channel if you already haven't. This is Dante Cook with Bitcoin Simply. Happy stacking.